When there's a crisis, who stands to gain? Who benefits? Follow the money with me and we'll find out. Let's begin by showing you what's been happening at this time where most people don't realize it, but big corporations are consuming everything. And above that, we have the central banks getting and gobbling up everything that's left. In this example here, we're talking about single family homes. And you've been seeing the news, if you've been paying attention, if you're subscribed to the channel, you know BlackRock, Blackstone, and other big corporations are buying not just multi-families, not just properties that are 300 plus units. We're talking about single family homes. In this case, they're referring to single family rentals. And in fact, the belief here is that institutions will own 40% of single family rental units in the United States. This is becoming quite extreme. Okay? They do give you the numbers and the details, but this is what I wanted to begin with, because under our very noses, we are seeing the actions taking place. If you follow this through the cycle, you are going to understand exactly what's happening. Number one, you have a crisis. During these times of crisis, we take extraordinary measures in order to have them resolved. There are bailouts, there are actions that are taken, there are tax cuts, there are all these different things that happen, and they want to resolve what the issue is. But you have something called the Hegelian dialectic, or problem, reaction, solution, and essentially they take this existing issue and they provide the solution to the public, and sometimes it benefits some people and sometimes it benefits others. But during that period, there's always going to be a clear-cut winner, usually not the middle class. Okay, and you see right now that the institutions, with their absolutely limitless wallets, they are able to pay up on units as much as they desire. Of course, there is, some, back and forth with that, but understand here that they are buying each and every thing that they can. It's not going to happen all today and not tomorrow, but this is what happens over a period. And through these cycles, as asset prices rise and fall, they accumulate. They tend to accumulate the majority of what they have during the weakest periods, during the times of turmoil. And who does this and who really creates this? It is the central banks. And so that's what we'll discuss next. Take a look here. We're talking about Neel Kashkari. Neel Kashkari being the Fed Bank president here. And you see, looking at this specifically, quote, "It is very clear that the US central bank has to tighten monetary policy to bring inflation back under control. Investors are assessing how aggressively the Fed can continue hiking rates in the face of mounting risks to growth." See, because they're increasing right now, stock market doing well, just that last few days hasn't been performing well, but you can see that over the last month or even more than that, it has been doing well. Look, 4,200 on the S&P, I think it was last time I checked. 5,000 was the maximum. 5,000 was the highest, almost 5,000 was the highest it had ever been. And yet today we're at 4,200. What are they worried about? Where are these so-called, the fear in the market? It's at 4,200 for the S&P. There is no concern here. There's something else going on. Stock trading is choppy, signs of investor unease are on the rise, and Wall Street seems to be thinking about only one thing, and that is Jackson Hole. Essentially what we have here coming up in the next few days, we're going to be hearing about it. It's a meeting of different people in the financial industry, including many central bankers. And while this is not the next FOMC meeting, what this is basically a whole bunch of bankers getting together, and we are going to get information as to where the Federal Reserve and the other central banks are with their policy. Are we still in tightening mode? Is this a pivot? What are they going to provide for us all? Because ultimately we have to deal with them. Okay? It's not the other way around. whatever they decide to do, we feel it. And we are going to get some information in the coming days. If you're not subscribed, you will miss out. So you definitely want to do that, all right? We're going to talk about something very big. And that is what's happening with asset prices, with inflation, and with so many other things. I mean, just look around. It seems today that everything is on the rise. US house values fell for the first time since 2012. Sellers and buyers are facing a very different housing market to 2020. Industry experts say the housing is in a recession, very different from 2008, that's for sure. And there are some pieces of data that I want to show you. I had them pulled up, but you can just see this. Total sales are declining. You look at actual month supply. So based on current sales, this is not total number of units, but based on current sales, you could see that we are at the levels of the financial crisis. Can you believe that? Because the sales are going so slow right now, it's kind of distorting this, but it is important. Okay, it's important to understand this and look at it. What does it tell you about the cost of debt? That's all. The cost of debt has risen considerably throughout this period. And that's spooking investors. That's spooking regular buyers. They don't want to deal with this. They don't want to have to say to themselves, I gotta buy, but I can't afford it. 72% of recent home buyers have regrets about their purchases. As the market cools, these steps can help you avoid disappointment. They talk about all the little tidbits and so on. As always, links in the description in the sources. But what are they really getting at, the 72%? I've shown you other numbers before, by the way, similar to this. The fact is, people went in thinking that interest rates were going to remain low, that buying a home is going to be easy, that they would be able to just get the offer that they put in the first place, and of course, maintaining it, paying for all the repairs, and doing all the activities of a home is going to be a simple task. And yet, it couldn't be further from the truth. And apparently, 72% of people are feeling that today. World food shortage going from bad to worse, according to the UN. Why? Because of what's happening with Ukraine. Ukraine was shipping out all this grain to different places. What about, I told you this before, neon? Neon, hey, you're thinking neon, you're thinking of those signs, the open signs and so on. What about the fact that it's used in the production of semiconductors? This is really key because when you have semiconductors being so important in the supply chain and all this stuff, you look at a situation in which now you have the disruptions. Well, did you know that 50% of neon comes from the Ukraine? So of course, this could be disastrous, to say the least. And so this is just one of the factors. You look at grain, you look at supply chain in general, but also the issues right now with weather. And my goodness, that weather. I mean, look at Europe facing its worst drought in 500 years. So the heat has gone up considerably. There's massive droughts taking place. Soil moisture, as they measure here, it is just something that they haven't seen before. You got the Rhine River, which is coming all the way from, I believe, Rotterdam, all the way down through Switzerland and beyond, where there's so many shipments coming through that way, and yet they cannot, last time I checked anyway, could not make any shipments anymore. We're reducing significantly how much can be shipped through. What do you think that does to the prices of those goods that had to come through that way, and now they have to find alternate routes? Are they going to use rail? Are they going to use trucks? How are they doing this? And the cost associated with it is going to have an immediate impact on those producers who are pulling that in, or maybe consumer products or what have you. So this is becoming very significant. And to all my friends who love a beautiful espresso, coffee drinkers set for price pain as Vietnamese reserves shrink. But it's not just there, okay? And by the way, Robusta. Do we have to get into this? Do we have to get into Coffee 101? While the Arabica beans are seen as being better overall, more resistant to mold and things, The Robusta provides a beautiful crema, but that's besides the point. Your coffee getting more expensive the higher these things go. And by the way, I don't think that people are going to say, you know what, the Starbucks coffee went from $4 to $4.20. I don't think people are going to stop drinking it or wherever you're going. But what it does is they're going to stop purchasing other stuff because they're still going to have their coffee. They're still going to have their basic, simple things that they have in their lives, but they're going to get rid of big purchases. And those big purchases, the ones that help the economy, are going to have an impact on, of course, other things. You see that. There's a knock-on effect or a domino effect. Now, this is some good news. I wanted to bring it to you. U.S. gasoline prices have fallen every day since mid-June. So that's where they suggest that inflation has peaked around June and things have started to come down. That remains to be seen. Biggest streak of declines in gasoline prices since 2015. Cost to consumers remains 23% higher than the same time last year. If you look at what Warren Buffett is doing with Occidental Petroleum, increasing positions dramatically, getting approval to purchase up to 50% of the company, as far as I'm concerned, it shows that he believes that you're going to see oil prices at least elevated for a long period of time. You're not going to buy that much if you believe something different, but these things do fluctuate all the time, and gas is not oil, but they are correlated. If Iran is able to come on to the world markets again, then that is going to be negative on the price of oil, could bring down gasoline prices further. How much, we'll see. But certainly what's happening with Russia, not going to get resolved. It looks like it's just not going to get resolved. And as a result, I think people should be aware of this when they are investing, okay? Because we look at geopolitical tensions, that does push the prices of certain assets up long term. So we need to, kind of realize what's happening right now and use our best judgment, okay? Last things I wanted to show you is that the PMIs, this is in Europe, so we're looking at manufacturing, okay? Euro area, Germany, and France, all of them have declined into contraction territory. We can see with the US, both manufacturing and services PMI numbers have come down. And in the case of the services, is in contraction as well. And we look at this globally, all of them, whether it is Eurozone, Japan, China, so on, all of them have been moving down. This is not a good thing. You don't want to see this kind of thing. I mean, look at the numbers. The US PMI, Composite Output Index, 27-month low. Services Index, 27-month low. Manufacturing output and manufacturing PMI, both of these 26 and 25-month lows. This shows us extreme weakness in certain aspects of the economy, but we're not able to see that. You're just not going to just see that data unless you look into the nitty-gritty like this. So we do have some positives. We do have some, data like this that comes out, and it's just unfortunate to see this stuff happening right now because people are being hurt by it. But what can you do? What are the actions that you could take today? Well, number one, you got to get away from spending money on frivolous things. Now is not the time. Now is not the time. You need to take what you have in your household. Can you sell those things? Can you sell those products? Do you need those things? Get rid of those. Can you increase your income by any means necessary? Can you cut some grass? Can you, when the winter time comes up, can you shovel those driveways? Can you wash cars? Can you do anything? What skills do you have? Are you a photographer? Are you a baker? Use the skills that you have today to bring in some extra income. You want to have cash? Not too much cash. Some people like the cryptocurrencies that provide, regular outputs, passive income that without audits and things, that's, higher risk. Other people stack precious metals. Some people have real estate. Don't think of real estate just in one way, okay? Because this is not the way you got to think about it. You could have other things like storage lockers as one example. Storage lockers being one good and possible way to bring in more income for you with a smaller price tag. That's real estate. Anyway, I'm ranting on, but I hope these suggestions are helpful to you. If you're not subscribed, you're missing out. I'll see you on the next one. Take care.